If you're thinking about withdrawing from your gold IRA, stop and watch this first. Because what just happened to Bill and Teresa Moore from Mesa, Arizona, could save you from a six-figure retirement mistake. Now, they're not financial experts. Bill was a high school principal. Teresa ran a small local bakery. But together, they had over $580,000 tucked away in retirement accounts after decades of saving. Then they made one simple move, and the IRS came knocking. We'll get to their story in just a second. But first, right now, in 2025, retirees are facing a retirement landscape we've never seen before. Inflation is still stubbornly high, cutting deeper into fixed incomes. President Trump's proposed tax policy changes could impact IRA withdrawals and capital gains. And just last month, another regional bank quietly collapsed, raising more concerns about where the market's headed. So, for thousands of Americans over 55, gold IRAs have become a smart hedge, a way to add stability and physical value to their portfolios. But here's what almost no one tells you. Withdrawing from your gold IRA the wrong way can trigger massive tax bills, penalties, or worse, leave you without the protection you built it for. That's exactly what nearly happened to the Moores. They had transferred $580,300 from Bill's 401k into a gold IRA during the chaos of early 2023. Everything was fine until they hit 72 and needed to take required minimum distributions, RMDs. They assumed they could just take the gold and be done. But here's the thing. When you withdraw from a gold IRA, the IRS sees it as a distribution. You either sell the gold and take the cash, triggering income taxes, or take possession of the gold itself, which is still taxed based on its fair market value the day you receive it. The Moores were about to move all their metals into personal storage without reporting the value properly. The mistake. It would have cost them over $41,000 in unexpected taxes and penalties. Thankfully, their gold IRA specialist caught the error in time. And here's the kicker. They started their gold IRA journey through a free educational guide, just like the one we're offering at the end of this video. Look, I get it. You worked hard. You saved wisely. And if you've got $100,000 or more in a retirement account, the last thing you need is a tax bomb waiting to go off when you least expect it. So let's break this down. What should you know before you withdraw from a gold IRA? Know your RMD age and schedule. If you're 73 or older, you must take RMDs, even from a gold IRA. Missing that deadline? That's a 25% penalty. Understand the form of distribution. Will you sell the gold or take physical delivery? One creates liquidity, the other creates a tax event. Have a plan for tax withholding. The IRS doesn't wait around. They expect their cut immediately, unless you've arranged otherwise. Talk to a gold IRA specialist, not just a CPA. Most accountants don't know the nuances of precious metals in retirement accounts. A good specialist will coordinate with your tax team to avoid surprises. Avoid early withdrawals if you're under 59.5. That 10% penalty stacks fast, and there are smarter ways to access funds if needed. Now here's what I want you to take away from this. Bill and Teresa didn't roll the dice. They asked the right questions, took the free guide, and got clarity before taking action. You can too. So if you're nearing retirement or already there, and you have over $100,000 in a traditional IRA or 401k, click the link below. You'll get a free gold IRA info kit, plus access to a no-pressure, one-on-one educational call with a real specialist who works with people just like you. No gimmicks, no free silver bait, just facts, guidance, and a little peace of mind. Because at the end of the day, your retirement isn't just about dollars. It's about security, about legacy, about making sure what you worked for lasts long after you're gone. So get the guide, take the call, ask the questions, and before you make any withdrawal, make sure it's a step forward, not a costly step back.